Mr. Mark Selby, how are you, sir?
Very good, Mr. Matthew Gordon.
Good. Are you still trotting around speaking to politicians? How's that going?
I am. Yeah, no, we had a great day in Ottawa last week, and I am off to Queen's Park, which is the Ontario provincial government buildings, in about half an hour. So
it's interesting. I'm getting a lot of that from junior mining CEOs saying in terms of the support they're getting from Canadian government, provincial and federal. It's really starting to well, if you're in the EV space. I think it was the proviso on that one. Good. Well, look, we're going to run through a couple of sort of company announcements as well in a second, but let's start off with market news. And is there hope ahead?
Yes. Again, despite the news, it's still early, but we're coming to the end of Chinese New Year, and we have seen prices now at about a 3-month high. Out of the range of 16 to 17,000 where they've been through that 3-month period, and popped up to 17,200 as we're speaking. So that's 6% in 2 weeks. I had been calling for a rebound to start after Chinese New Year. We'll have to wait to see what the market commentary is next week. Basically, people, as I said, shut down for 2 weeks, so we'll start to see reports and stuff in terms of what's happening in the market. But so far, a good start to the Year of the Dragon, and we'll see whether this continues. Again, I expected the rebound. Didn't think it was going to be this quite sharp. And then again, we may be back at 16 by the end of next week. But for right now, at least it's seen that there is some ability for some momentum coming off the bottom here. So. Which is great.
Right. Okay. Well, let's see if whether it's Year of the Dragon or Green Lantern. I'll see where this one goes. Right. So when it's really important to also understand that if we can get the momentum going, because I think the two things that people are worried about when it comes to nickel is obviously the broader macro thematic driving price.
Yeah.
And the second thing is some of the actions that they're saying, and I was quoted to me as recently as yesterday, about copper companies putting projects into care and maintenance. We've talked about Wyloo, Mincor, and now we're sort of seeing BHP sort of joining the fray.
Yeah. So as we're getting into quarter reporting season, some of the big guys, again, some good capitulation moment news, which again helps confirm that you're on bottom. So BHP, I think, is taking a $5.7 billion write-down on their nickel business, including the asset that they bought as part of the Oz Minerals transaction. Lots of doom and gloom about the asset. They lost $200 million in the most recent period. So, again, when we talk about, that we're trading into the cost curve, there are lots of very real world examples, and that entire Nickel West business, being one of those examples. Glencore also announced that they're not funding Koniambo any further. That's their big project in New Caledonia. That's basically never worked. It's been at best 50% capacity or so. And New Caledonia is a very expensive place to do business. So now part of that, I think, was BHP, threatening that they might shut down the entire operation, put it on care and maintenance for a period of time. Aussie government's come back, said they're going to cut the royalty. And again, it's fairly chunky. You pay more, you've got your income taxes, but the way that the mining sector, pays taxes in Australia, a big chunk of it is that royalty. They've agreed to slash it in half for a period of time. And they've now added nickel to their critical minerals list. For some reason, I have no idea. Nickel was not on the Australian critical minerals list when they first came, when governments were all coming out with them. They have now added to it, which again opens up a bunch of other government financing incentives. And then France, again, nickel and tourism are the two industries in New Caledonia of note. And so France is offering the operator of the other big project, which is now called Prony Resources, which is the old Goro project that a consortium bought from Vale a few years ago. They've offered to toss in $150 million to try and keep that operation afloat. We'll see what happens. Again, both these operations have struggled on multiple dimensions, and we'll see what happens with those as they go forward. But again, all of this news flow is exactly what you see at the bottom in a turning point in the market. So again, the green shoots that we've seen this week, this news flow, this might hopefully, we'll put a pin in it as a bottom, and then we can start moving higher towards year end.
Okay, maybe we combine the tourism with the mine rebuild at Prony. You never know. Could work. They can have that idea. But I think the kind of bigger thing that you just mentioned there is obviously like governments trying to step in, because I think they're starting to recognize this critical minerals list and taking it a bit more seriously than they have done at any point since I've been in banking and investing. It was a sort of careful nod to the fact that these are important, but not doing anything about it. Actually, in terms of tax incentives, in terms of cutting down royalties, etc. Do you see more governments having to do the same? I'm talking about really the state of the junior mining industry in terms of access to capital, incentives to actually either get into production or kind of sort of, I guess, a mild disdain by most people for mining and fossil fuels at the moment, it seems, if I'm listening to my kids. So yeah. What do governments need to do? More than just money, I suspect.
Yeah, no, they again, the discussions in Canada, are good. We've talked about it. And so again, when you see governments throwing money after old projects that have struggled for a long time, you can imagine that governments that are trying to actually promote a critical minerals sector, are probably thinking about, quantums of capital, in that same range. And so, in the EV sector, we made the announcement last week about the downstream processing for both the nickel and stainless steel. Governments are very, very serious about domesticizing their supply chains, getting China out of the supply chain. Car companies, the whole battery supply chain, again, very, very focused on domesticizing supply chains. And so I think this 2024 is going to be the show me year, but I think people will be pleasantly surprised, by the end of this year, and they look back and they see the kind of deals and the kind of financing support that have come from the various levels of government and from the downstream customers, that they'll kind of be, oh, geez, maybe we should have, taken a punt on this one, earlier this year, because the government is really going to show up with the money.
Yeah, and I guess it also is a very good example as to why industry doesn't kind of, go upstream as well. Project Goro, as was, and now Prony Resources, that's been a huge destroyer of capital and money. Glencore obviously struggling, BHP struggling. Do you expect to see sort of more government initiatives like this, or can industry, I'm talking about OEMs, look past that and look and try and find better projects if they're indeed qualified to identify better projects? And where's the money come from?
Yeah, no. I would say again, both the various government in Canada, we have a whole sort of alphabet soup of various government programs that have billions of dollars of capital to deploy, and they've now finally geared up to do it. And in the car auto sector, again, the car companies, the battery companies that are serious about this, have really, have put together sort of cross-functional teams, pulled the best people from various departments across the business. They've gone out and, have mining, geology people on staff so they can, look effectively at these types of projects. And so, again, they're doing the work, to be able to make these investments, because they know, that the capital markets as currently constituted, aren't prepared to deliver that quantum of capital, to deliver these critical minerals projects that these companies all need before the end of the decade. So, again, not there yet, but it'll be before year end. As I said, you'll see a number of we've already seen some more deals happen in the sector, and I think you're going to see a whole lot more happen as right. This year goes on. And
I think, and again, just in terms of just trying to deal with some of the negative comments around this portion, is like, if you don't look at the detail, looking at headlines saying, BHP's taking a write down, or we're thinking of going to care and maintenance, you think Glencore is going to need to find and pile more money into sort of a loss-making exercise. I think the French government, how they're going to step in on a big project like Prony, you would probably, it'd be reasonable of you to think, well, this whole nickel space isn't working because the nickel price isn't moving quickly enough. But I think it might be worth kind of pointing out, I think I pointed out before, I spoke to one of the bankers involved on the Wiley Mincor deal, and that was really a case of it was done at the height of the nickel price, and it was a very highly levered deal. It's more around financial structuring as to why perhaps that is seeing a few problems, and it could be said that I think some of the projects we talked about today, perhaps the financial structuring, financial engineering hasn't helped. It's not necessarily, all of the supply of nickel is going to come from Indonesia, so why bother, lads? I mean, is that, how do you read it?
Yeah, no, I think the key here is not to take one or two examples and sort of spread it across the sector to say, that this doesn't work. The two assets in New Caledonia, both of which implemented, very novel quote unquote technology on laterite deposits in one of the most, politically challenging, jurisdictions to operate in New Caledonia. And so, they've struggled for 15 years. They have their cash costs are probably in the $8 to $9 to $10 a pound range. And so, this is, when the price is $7 and you're at $8 a pound. Now there's a whole series of projects like ours, like FPX's, that are, big scale and, our cash costs, we'd still all be making money at today's nickel prices. So it's important not to take a set of projects that have some significant flaws and say that everything in the nickel space looks like this. In terms of Nickel West, these were mines that were, got started, discovered in the 1970s and brought online from the 1970s through the 1990s. And so, these are 30, 40, 50-year-old operations in Western Australia. We haven't had that many brand new discoveries. And so, when assets are 30, 40, 50 years old, you generally try and do a good job of picking out the best stuff early on and leaving the less valuable stuff to the end. And so a lot of these mines, are picking away at the less valuable stuff. And Western Australia is a very, very expensive place to operate. And so again, that's why these operations have these, high single digit cash costs and at today's market are making money, but that doesn't mean a big new operation on a new deposit that's properly structured using proven technology can't deliver low cash costs for long periods of time, right? And so, that's the opportunity, and that's why the governments and the battery supply chain are talking to us. Okay,
so it's basically what we're saying, chaps and lasses. Critical thinking needed, trying to understand the root cause of some of those issues. Can be financial structuring, can be technical, can be political, can be lots of reasons, but no broad brushstrokes, please. Okay, you've got a little bit of news yourself, actually, which I saw this morning, and in fact, a lot of news coming out of you at the moment. So give us an update.
Yeah, so we had two exploration results releases from the work we did at the end of last year. So at Bannockburn, this is a project that had been partly drilled before by a company called Grid Metals. They were focused on their lithium assets, and we picked up Bannockburn. Again, it's not as big as Crawford, but it's got this nice higher grade core that seems to show up in pretty much all the drill holes down the center line of the deposit. And so, it's about the footprint there is about a third the size of Crawford. But remember, Crawford's the second largest nickel reserve in the world. So if we've got something that's a third the size of Crawford, that's a very, very happy thing. And again, as part of a whole cluster of deposits, targets that we have in the southern part of the south area, about 80 kilometers south of Timmins. On the other side today, we announced a new discovery at Mann Central. There's a whole series of very large ultramafics. There's basically 5 deposits that are, part of one big trend. All of them are ultramafics that are a multiple the size of Crawford. And so these ones weren't as high grade. They're made mostly peridotite, which has a lower nickel content than the dunnite that we typically look for. But again, quite happy given the scale of some of these deposits, what we have there, and we're going to be drilling the rest of the targets as we go through the rest of this year. We've got a conference call Friday morning just to go through the exploration strategy. We raised $35 million with Agnico Eagle being the back end of a charity flow through deal. And so, that allows us to really, demonstrate what we think, Timmins Nickel District is going to become the world's largest nickel sulfide district by the time we're finished. So,
and will that explanation or that conversation cover how you deal with your multiple projects, because obviously we've been very much focused on Crawford, and getting that through the economic study phases, and working through to the point at the end of next year. You've got multiple projects. You've said that some of them potentially bigger than Crawford. How you not just allocate capital for exploration, but in terms of how you as a business manage all of those separate, I guess, potential revenue streams.
Yeah, we'll be talking about sort of, how we're going to sort of the sequence in terms of how we're going to go through unlocking those deposits, over the coming year. And, again, I think one of the things that is a differentiator for us as Canada Nickel versus the other companies is, a lot of junior miners have, one project, maybe two projects with a little bit of, exploration potential. There's nobody on our team who thinks that, Crawford is the best deposit we have. We've got 20 plus. And when you have a very large asset portfolio, it gives you lots of ways to unlock value. So, I think it's going to be an exciting year as we, now that we've demonstrated what we have with Crawford, then, the other portfolio of assets and people we have, to be able to unlock value as we go through 2024 will be equally exciting.
Okay, well, we'll look out for that one. And obviously, please come on and explain. In fact, I'm going to see it in Toronto. Maybe you're going to help us a little bit, give us a bit more color then.
Yep.
Moving on. Okay, I am never one to gloat because I wish people well. We need all the nickel in the world. I'm never one to say I told you so. But we have had a lot of sort of inbound from people asking us to talk about this, which is the situation with Horizonte. Some news this week. Well, give us the news, and then maybe we can just sort of chat around that, and perhaps what we called about 3 years ago with this project. So give us the news for us.
Yeah, no, as you say, it's not helpful. When we see this kind of stumble, but they just announced their updated capital costs. They halted the project back several months ago when they realized that they were all not on track and they had a lot of work to do. And so the number came back that they needed $450 million US more capital. It'll take a further 18 months to complete it once they have the financing package in place, which they expect to have by mid-year. And that's taken the overall capital cost, to just over $1 billion US. Again, I think the lesson here is, and the thing that we had flagged back in the day is, there was two other, the one thing to always do is take a look at a project and really try and find an analog to give you a sense of what the capital costs and operating costs are. And the thing that I struggle with is the fact that you had two ferronickel operations, in Brazil, done by much bigger companies. So yeah, smaller companies can sometimes do things more cheaply. But the gap between, the $1.5 billion that Anglo had spent, and the 450, that they were initially or 500 million that they were initially targeting for the project just seemed a little too big. And that, something close to $1 billion would probably be more likely. And unfortunately, that's where we've ended up. And we'll see what happens, for the remaining shareholders, with the assets that Horizonte have. But, there's deep pockets in the project. So, I think this will get refinanced and get moving once people are confident that we're going to see a recovery in the nickel market. And again, do your work. I mean, I think a lot of people saw they did a great job. They had Orion in there. They had Glencore in there. And you think, oh, okay, these, big mining companies, big fund investors, obviously they've done all their due diligence and it has to be this number. That isn't always the case. So again, just make sure to do your work, find assets that look like this one and try and benchmark it as best as possible. And if you can't find a benchmark, then, sort of treat the investment with the right amount of risk in terms of your portfolio. So, those are the two key takeaways from this one. So,
well, if you can't find a comparable or do peer analysis or get the data that you want, move on to the next deal.
Yeah,
because the company should help you and make that information available for a start. There's more deals looking for more money than exists. So don't worry about missing out on this deal. There's another one literally coming up right behind. So I say that in terms of investing what I want. The other thing is, like, when we were talking about some of these issues about 3 years ago, we got a lot of stick for daring to suggest that perhaps the capex may be a little bit light. We got a lot of stick for about a year and a half on that. And I think this is why we ask questions. It's okay in investing to ask questions. You don't go and, kill the messenger and say, well, how dare you question the company? Your job is to ask questions. The company's job is to answer those questions satisfactorily so that you get comfortable enough to make that investment into the company, okay? At no point did the company do that. Okay, it'll be okay. And to your point, which I think is a good one, is like, well, all these big shiny names, and we'll get blinded by the brands involved with this one. And we've seen this nice settings in my banking days where you just go, actually, some of these guys just follow the guy in front. They don't do the diligence. They go, oh, if that company's in, it's good enough for us. We'll go in. And you basically get a long line of big name companies who haven't done the bloody work, right? And I've seen it so many times. And I don't know if it was the case here, but as an investor, don't assume that these guys have done their homework unless they say, we've been at this for 6 months and done our homework. You got to see that and hear them say that to be, to feel comfortable. Because at the end of the day, guys, this is your money. And if you're going to go on hearsay or making, wild assumptions about what people have and haven't done, you're putting your money at risk. Okay. So, and I just think that this is a perfect case study of, sentiment. It was done at the right time, bravado, not a lot of facts and not a lot of fact checking, and boom, bunch of value destruction here. And now we're sitting back up around the numbers, which I think you and I were talking about some 3 years ago in London, and subsequent to that of over $1 billion, which is a bit more like everyone else. So, like I say, not good for the sector because it makes people lose faith in mining. It's not good because of the value destruction. It's not good for nickel because people will make assumptions and, again, project, as we said earlier in this conversation. Don't make those projections. Critical thinking, really, really important here. So there you go. Some of my views on this topic. New management team, new assessment on the capex. Let's see where they go. Might be able to get something from it. Smaller companies, but perfectly formed, nevertheless. We'll start with Magna Mining.
Yeah, so they picked up the old Green Hill mine from Inco, now called Denison. They are targeting now some of what's called the footwall deposits in Inco and Sudbury. There's three types of deposits. The main ore body there that was largely mined out is your sort of classic nickel to copper with, nickel to copper, about 1.5 to 2 to 1 nickel to copper. But, the big excitement with a company called FNX back in the 2000s was they made a bunch of discoveries and were able to exploit a bunch of these, what are called footwall deposits. These have, basically, anywhere up to about 1% nickel, 5 to 6% or even higher amounts of copper, and, anywhere from 5 to 50 grams of PGM material. So very high value rock. And again, they put out some nice results. And again, 0.5% nickel, 1% copper, and 9 grams of platinum palladium over 15 meters. So again, good to see. And we'll look to see more results. The challenge with these bodies are they're a little irregular. If you think of literally, you take a jar of rocks and you pour molten metal in them, and where that molten metal is, this is the stuff you want. These breccia deposits, that's kind of how these ones form in the basin. But with these kinds of results and that's very, very encouraging. The other drill results that came out were Power Nickel up in Quebec. They're targeting some step outs around the resource. Anywhere basically the highlights were 8 to 12 meters with kind of just over 0.5% nickel, 0.5% copper with some cobalt and PGMs associated with that. So, again, as the year goes on, people doing the winter drilling, because in places like Canada, winter is a good time to get some drilling done. We should see some more results over the next few weeks. And heading into PDAC, everyone likes to put out their big results announcements just going into PDAC. So hopefully when see you in Toronto, we'll have lots to talk about.
Hope so. And I think the other things are worth noting about, Magna, one is a good team. And I like those. I like those guys. Solid team doing the right things. I think it kind of got a bit hot and heavy back at the end of 2022, beginning of 2023, up around $1.20. They're about a third of that right now, but the project's got better. They know more about it, and one hopes that they can continue to kind of build that one out. And Power Nickel, I'm reliably told by the CEO it's the best nickel project out there. So who am I to question Terry, the great Terry Lynch? So again, look forward to seeing how he evolves and develops that project. That's not me being facetious. I think he's got something good. He needs to kind of build out the kind of scale of that and demonstrate, can this be big? Can this be truly therefore economic? And can he raise the capital cheaply to be able to move this along the phases, as it were? So yeah, good stuff. Well, let's catch up in Toronto. I'm very much looking forward to that. We're going to see you on the Saturday. Geez, popular as a man. We're about to squeeze you in on the Saturday. But maybe grab a glass of wine afterwards. Thank you very much, Mark. See you soon.
Sounds great. Thank you, sir. Take care.